Yo, what's up team? What's up? Yeah, it's been a while since I sent something to the premium platform. So I just thought of sharing some few things that I think that will be helpful to all of us. So I'll just touch on a few things that we should always look at when you're doing analysis and when you're trading, right? If you have any questions, you can just send them through. And these videos, I'll be posting them on YouTube, and they'll be private. Make them private for you guys only for some reasons. Okay, so I will just use this 75 for my illustrations here, right? So the first thing that we have to talk about is this. Let's go to V75 daily time frame, right? We talked about our waves, right? That's the main thing that we focus on when we are doing our analysis here. So let me put something on my chart there. Insert that thing. All right. Okay, so we talked about price breaking previous highs, that being a BMS, right? Allow me to just do this or flow soon, right? If you look at this chart, you clearly see that this is a BMS, right? The market created a BMS here, then price came to this zone and you created another BMS there, right there. So this will look like a fake BMS. Then price pushed again to break this high. That's another BMS that price created there. Then after this high, we went on to create this high, right? Hope that is clear to everyone, right? So this one is actually not a fake BMS. If you count your candlestick, remember we said candlestick 1 close above this level, candlestick close 2 above this level, right? So the levels that we actually consider, right? Hope you got that well, right? We consider at the end of the bodies, right? If we have candlestick closes above the bodies, the wicks here, maybe they'll just stop and to a previous high that was there, so we can't really rely on just the wicks, right? Remember, if you put a line chart like that, you actually realize that there is nothing there, right? Remember, the forex market can be represented in different forms. We have the line chart, we have candlesticks, we have a whole lot, we have these bar whatever things, right? So it's just the type of graphs that you actually want on your chart that you can use. So the best that I have seen is just the line chart. If you go to the line chart, you actually see that there is nothing there. So price didn't actually play above that region, right? They will just stop and a certain zone. So this is actually a break to that zone. If you look at it like this on the line chart, you actually see a break, right? So for you to be in line with everything, or the best thing to use there is just the line chart. It will actually tell you the proper positions, the best positions. So when you're doing your waves, make sure you also bring the line chart to check whether you're using the proper zones. Okay, so we had those BMSs there. Then after that BMS, we can clearly see that our price managed to come and break this previous low that we had there, right? Price managed to come down and break that previous low, meaning that we're in a downtrend now, right? So seeing our price in a downtrend, price is now reversing. Obviously, this is a return to RT or an order block that will be lying right in that zone, right? Before we go to that zone, what was this? This was just liquidity engineering. Remember that video, 4 steps to a trade entry. Always go back to that video. You'll always cause you to reflect back and remember the concept that we actually taught, right? So if you see yourself forgetting about some principles, get back to the videos, learn, then you start trading, right? If you now have confusion, just get back to some videos. I'll actually encourage you to go back on the one that is written as sniper entries, right? then the one that is in 4 steps to a trade, and those are very, very helpful. Even myself, I always go back to those ones and look at things when I in a phase of confusion. So this was just liquidity engineering there, right? Creating these highs, right? These almost like equal highs. Then this is now a stop band coming into that zone. If you bring back our candlesticks, you can clearly see that this was now a stop, and price came into that zone to hit those stops at the same time, completing our return to what? To RTO, right? Then after that, what we see now is price trending and should go away, go down, right? That's what you're seeing there, right? It might rise, but we should have taken good sales from that. So there is somewhere that I'm actually taking you to, right? So always make sure that the first thing that you have to do, at least go on the daily time frame, H4 time frame, try to map your structure, try to draw your waves there before you do anything, before you proceed to do anything. This is the first step that we use in our analysis, right? So remember the key points, the key zones that you should actually break. If you are saying this was an impulse move that originated from this zone, make sure that this one is actually broken, right? And on using the order blocks, we'll actually prefer the order blocks that are at the extreme levels, right? At the extreme levels where price actually started the impulse move. Hope you understand me on that one, right? Good. All right, let's actually go to the next thing that is of greater importance, right? Of greater importance. The next thing that you should miss on doing your analysis, remember we talked about LQPs, large quarter points, right? Never trade, I'll encourage you, never trade without these points, because they'll help you simplify your analysis. They help simplify your what? Your analysis, right? By merely looking at the chart, you can actually see that price is simply bouncing on quarter points. They are just some easy trades that you can actually see. By merely looking at these quarter points and what is there on my chart, there you will see that this is just a BMS that we call there, right? Liquidity engineering, right? But it's liquidity engineering, price is bouncing on a quarter point. You can actually pick up some trades there because there is an order block closer to that zone. You would actually pick some trades closer to that quarter point and sell, right? Price pushed up, clearing this liquidity that was created there, coming to an order block that is just sitting on a what? On a quarter point, right? So these are easy trades that you can actually pick from these zones, right? From looking at structure like this, you see that price also broke this high when it was going up. It broke this high, right? And now it was coming back. It came back just to your what? To a quarter point where we have an order block. Remember, I told you again about quarter points and order block. Seeing an order block lying on a quarter point, that gives you advantage in the what? In the markets, right? So always make use of these quarter points. Make sure that they're on your charts. If you look at this, there is a small structure on smaller tension. There's small structure that is actually there on the very quarter point. There is an order block there that you could actually use for some sell trades. Maybe to take your profits, you start taking your profits on this quarter point, other profits on the other what? Quarter points. You can see these breaks that we have on our what? On our quarter points. So never make a mistake of you trading without these what? These quarter points. They will guide you. Look at price was doing. It was just moving from this quarter point, high quarter point, lower quarter point, this quarter point, price is just bouncing on those levels, right? So make sure that on your charts you have these points drawn on your chart, right? It's just I'm just reminding you of important things that we actually learned about, right? Our concepts will never change. They are all the same, right? So that's the thing about quarter points, right? Hope you go back to the video that talks about quarter points. If you look at these numbers, this is just 975. Let me start from here. This is 900,000, 925,000, 950,000, 975,000, 1 million, right? Those are the quarter points, like that, right? So an easy trade, if you're looking at a structure like this, price was just dropping here, right? We might actually get a trade, a simple trade just on this quarter point, right? Sitting in that OB. If you get a reversal on lower time frames, you might actually strike this trade. You might actually take this trade at ease, right? You see on this quarter point there is also an order block. Maybe if it fails there, you're going to get a simple trade that will actually come on this very what? Quarter point. So make sure that you go back to the concept of quarter points and revise on that. Then there is the other thing that I didn't actually spoke about in this class, which is volume, right, which is volume, right? Times you hear me mention volume, then you might actually wonder what is volume, right? So let's actually get a clear chart and I'll explain what that means, right? Okay, so looking at this very zone, you can clearly tell that price was playing in this region, right? Let's consider the body closes, right? The lowest point happens to be this one, then we had this one right there, right? I want to explain from the bottom, so let me just take that zone like that, right? Considering the end of those body closes. All right, let me do this. So okay, right. So price consolidating. Remember, we talked about consolidation phases and how we actually treat those consolidation phases. Whenever we see consolidation in the market, it's an opportunity for us, right? Price is either going to come back to the midpoint of that consolidation and will take good sales from that zone, right? I'll teach you another concept again on this issue. Price might just come to the midpoint of the consolidation zone or to the very order block, that is those extreme highs. But anyway, whenever we see price consolidating there, we say that the market is trapping volume, right? It's trapping volume. There are some stoppers that is there. Price is creating liquidity to the lows, liquidity to the high, right? So when price is now decided to move, right, we said price confirms with what we call a 3-bar play, right? What I'm just highlighting here is what we call the 3-bar play. That's what we call a confirmation. Whenever I'm saying it's a confirmation, we have 3 bars concept. This is the 3-bar concept, whereby we're in a bullish trend, right? We see a bullish candle, then 2 red candles. So our confirmation comes on the second bearish candle. We got this bullish one, 2, 3. We don't sell the moment we see a bearish candle close like this. No, we don't sell at that very moment. We sell after the second bearish candle. That happens to be this one in this case. When it closes like this, then we can sell. Many times we get easy trades and easy slides in the market where you are going to count at least 6, at a minimum of 6 candlesticks in profits. Like in this case, if you count from this one, 1, 2, 3, 4, 5, 6 before the break, right? I'll do this several times for you to see. At times they might be 5, at times they're 6, at times they can go 7, 8, but at least at average there should be at least 6 candlesticks, straight candlesticks that you actually see after the confirmation, not after the confirmation, after the beginning of that downtrend, right? Including these 2 that are on the 3-bar play. So this is just the 3-bar play that we are seeing there. 1, 2, 1, 2, 3. It confirms there. We jump into what? Into sell trades there. So when we say trapped volume, basically we are saying price is failing to take out these lows. We consider the close of the bodies. We don't consider the wicks, right? Price is failing to close below this level. So it becomes a key level in the market, a level of interest. This one, right? It becomes a key level in the market. So we are looking for price to close below this key level. So in this case, we got this one. This is the candlestick that actually took volume, finished on the 3-bar play, right? Maybe I'll explain it further on other opportunities, right? So price is closing below this volume. This bar is taking out the volume that has been trapped within this region. So after this candle close here, price has been released, then we can start to look for sell trades after this scenario, right? Let me take another example. If you look at this very point, right, it was a peak and price is consolidating within this region, right? In that peak, let's take the highest point that we're actually seeing there, where we can actually explain is trapped volume, where we can actually explain our trapped volume. Let's take these 2 bars on this neckline, right? So price was trapped within this region, right? It was trapped within this region. Then this bar managed to take out this one, right? Many times I usually like this. If the second bar on the 3-bar play takes out this neckline, right? Price managed to close its body, close slightly above, meaning that after this candlestick we are most likely going to get an easy move to the upside like that, right? So we count 1, 2, 3. That's being our 3rd candlestick and closing above that zone. Then trapped volume has been what? Has been wiped and we're now what? Moving. right? In this case, 1 2. The second one didn't necessarily take our volume there, right? So you might be reluctant to take that opportunity, or you might actually say, okay, let me wait for my price to close below the trapped volume. Close below the trapped volume, then price is now moving. Here, close above the trapped volume, then price is now what? It's now moving. So that's the concept of volume there, right? After price moves from this trade volume, we actually expect an easy move. Then I will explain further how we trade this easy move, mostly if you are trading on the daily time frame, and how to make use of the daily candle closes to make profit or to maximize profit using the previous day momentum, right? Let me just look for another example for trapped volume. So we are saying price is consolidating like this, right? Price is consolidating like this, right? Like that. So I'm looking at that low, I'm looking at that high. Price is failing to close above that high. Price is failing to close below this what? Below this low. So after price consolidates like this, we count, we see this bar, sorry, this bar actually managed to close below this what? This trapped volume, right? Price managing to close below this volume will get an easy slide like this. We'll get an easy slide like this. So we want to take advantage of this momentum. We want to take advantage of this what? Of this move. So we'll trade this sell at ease, and I'll show you how to actually trade that, right? We are not moving away from our structure. Remember, this is done inside the structure that we actually trade. We're just saying in the peaks, right, where we're getting our reversals, right? Or maybe a level where price is deciding to do a continuation. Whenever you see price being traded in a certain region, wait for the third bar. Here we count 1 2 3. So the third bar here on the 3-bar play confirms that we are going down, right, and releases the volume. So we'll get an easy slide from this what? From this zone. That's the 3-bar play that you guys were asking me about. That's how I trade it, right? So for example, this is a continuation, right? If you look at this zone, you'll actually see that our price was trapped in a certain region, right? Let's just look at this low. I think exactly this one, right? If you look at this low, actually it's let's include these bars exactly like this. Price was just in a consolidation phase in this whole region, right? It's a continuation level, right? Price was just trapped within this region. Price is failing to close below these bars. Price is failing to close above those bars, right? Then if you look at this zone, this bar managed to close below this. So price managing to close below this tells us that we are now going to slide down. Price is managed to close below these levels. I prefer looking at this kind of structure like on higher time frames. Price has cleared out that volume, right? At times we might get this retracement or a corrective move, right? Because this will be an impulse, a corrective move, then we'll take some sales and go down. So in this case, 1 2, right? This bar actually took the volume that was here, but it didn't take out the volume that was there. So this third fully confirms it. So after this candle, we can actually sell and enjoy the profits that we're actually seeing there from that point. So I think the concept of volume is it's easy now, right? If you look at this zone, this high created some region where price trapped a volume from, right, this high. So this bar came to clear out that volume. After that, you can get those good buys, right? So we can look at several examples that we can use here. So now let me move to how we take advantage of the daily time frame candle close, right? So this concept of volume can actually be done on any time frame. For example, let me just go on M1 and look at an example on a situation where we'll have used this concept on today. Not seeing a clear zone there. Not see. All right, let me just use this very high. Okay, price was playing with this zone. It created this neckline, right? Price created this neckline, right? So from this level, you can count 1 2. This is the third candlestick, and it's closing below the level of the neckline like that. It's breaking, so it has cleared volume already. So after clearing volume, at least we might get a small retracement, or price can just continue. But price has cleared this level, right? Price has cleared this level. Now we can slide going down. So the trapped volume has been taken right there. So whenever you're in a peak, make sure that the trade volume has been collected. After the trade volume has been collected, then you can easily trade in that in that direction. And I prefer trading these patterns when you are seeing M and W M and W patterns, right? Because the neckline marks the trade volume. The third bar on the right leg there, taking out volume, confirms this M or W pattern. Then you can actually trade, right? Then on the 3-bar concept, at times you might see a structure like this. Price created, broke this high, that was a BMS right there, right? And price is returning back to an order block like that. So it's not every time price is going to give you M's and W patterns. This is the point, right? But in an order block like this, price is dropping like that, right? Then you get a 3-bar play right in the order block. You can just use that 3-bar play as your confirmation, right? You can count 1, this bar, 1, 2, 3. So after this candlestick, you can sell with confidence. After this bar, wait for these candlesticks to close. Never be in a rush, right? 1, 2, right? So after these 3 bar, 1, 2, 3, the third bar, right, being the second bullish candlesticks, now you can what? You can buy into the market and you move with the market like that. That's how you treat it. So at times you might not get the W's, right? It might just come like a V reversal like that. So you should maximize on it as well, right? So I've explained that. I've explained the concept of volume. If you have questions, you can still ask on that concept of volume, right? Whenever you see trade volume, wait for them to clear that volume, right? Or to break out of that trade volume, then you join into the what? Into the market, right? So quarter point, I have highlighted that. Volume, I've mentioned volume. 3-bar play, I've mentioned that. The key points on structure, I've mentioned that, right? Then I've also told you about these moves where price will move like 6 candlesticks straight, 6 plus candlesticks straight before they retrace. I think I've mentioned that after clearing volume. Let me just go on the daily. After clearing volume, right? Many times I expect about 6 candlesticks. Clearing volume there, right? From the beginning, 1, 2, 3, 4, 1, 2, 3, 4, 5. Here we got 5 candles, right? From this zone, 1, 2, 3, 4, 5, 6. We got 6 candles there. Then you got a break there, right? So at least it's like on this move, right? Price return to this very order block that we are seeing there, right? For me to say this downtrend, or for me to be exiting my sell trades that I've actually taken there, right, I expect to see at least 6 bearish candlesticks. 1, 2, 3, 4, 5. We are most likely going to get another candlestick there to make them 6 before the what? Before the reversal, right? As you be trading, you will actually meet these scenarios and you take advantage of them. Let me show you another example of a zone that I once traded, and I mentioned that one in the group, and it was a setup. I'm forgetting the dates. On March, it was in March, it was in February. 2, 3, 4, 5. Yeah, I think it was this. Yeah, it was this move exactly, right? Because I know there was clean candles, right? Okay, exactly, it's the one. It actually confirmed with an M. So here price broke this previous what? Price broke the previous lows that you're actually seeing there. Price broke the previous lows that you're seeing there. This is a BMS, then return to this order block, right? So my price is returning to this order block, and in that very order block, it managed to give me an M pattern, right? So price came, right, gave me a neckline there. Then on the neckline, the very concept that I'm actually explaining appeared. It's an M pattern, right? On the second leg, we get 1, 2, right? So we get a 3-bar play, 1, 2, 3. The third candlestick is actually clearing that volume, right? What you expect from here, guys, these are examples, or these are situations where you just have to open the volume, open the best low sizes that you can actually use, right? Because you're confident, right? You are confident here, right? Because of this 3-bar play, you have the M pattern on the second leg. You see easy moves, easy and fast moves, zero drawdown moves, right? Even on a retracement, the best retracement in the forex market is when price retraces with candlesticks of the same color creating a huge imbalance like that. Just blue candlesticks closing the imbalances that we are seeing there. Just that 6 plus candle, 1 2 3 4 5 6 candle. The moment I got this sixth candle, I knew that we were going to get a clear downtrend. If you look back into the history in the group, I think there is the very point where I explained this before price actually reacted in the way that I explained before that setup, right? So this is a clean example. These are retracements. These are the best retracements that we will actually want to see in the in the forex market, because they create imbalance there. That should be what? That should be closed. Coming to that zone, 3-bar play, confirming in our order block, then we jump in. So on this one, you will jump into the market easily because we got 1 2, the third candlestick change direction, so you will easily jump into the market, right? But after seeing this 3-bar play, now you jump in. I'm not only saying that you're going to jump in on the 1 hour time frame. No, remember that video on sniper entries whereby you go to M1 time frame, you just go and apply the same concepts on 1 minute time frame and you trade with ease. Okay, thank you for that. So I'm now moving to the last thing that we'll have to talk about in this session, then I close. Okay, so let's go to the daily time frame and make good use of the daily time frame, right? Okay, the best thing to ever do in the forex market is to trade in line with the daily time frame. Simple, right? The best thing. I was correcting Charles, right? Today is the 3rd, not the 3rd, the 20th, right, of March, right? On the 19th of March, that is yesterday, right? That's when I was correcting Charles. I think it's today actually. I was correcting Charles. He was buying V75, right? He was buying V75 yesterday, right? Yesterday, and he found himself in losses from this week, right? And I just explained saying don't oppose the daily time frame candle closes. Don't oppose the daily time frame candle closes. Unfortunately, on MetaTrader 5, this candle looks like it's not like a doji, like it's not a bearish candle, but it's a bearish candle, right? If you go to TradingView, you actually see that. If you go to TradingView, okay, I was trying to load something there. If you go to TradingView, you actually see, if you zoom well, this is a red candlestick. It's a bearish candlestick. This is recent, right? It's a bearish candlestick, this one, right? It's a bearish candlestick. So here, just take it as a bearish candlestick right there, right? Okay, so we had a bearish candlestick like this. So personally, what I do is, if the market closes bearish, all I'm looking for is a bearish setup, right? If yesterday closed bearish, I'm looking for bearish setups. Whereas if I'm in a downtrend like this, I'm looking at my structure like this. This one I actually explained, price had come into this that order block. So all I'm looking for are bearish trades. Even if they start off by pushing upwards, I know it's a retracement trying to trap traders, right? All right, let me start right from this zone. Okay, guys, so I said price took out this volume. Listen attentively. So I said price took out volume with this bar. I might not have traded this candlestick, but this one, I'm going to confidently trade this bar, right? And this one, and that one, and that one, right? So now, how do we trade those bars? We just have to look at our structure, right? So from the daily time frame, we see this bar closed bearish. So we go straight to at least H1, starting on H1, right? Then you analyze your structure on the H1 time frame there. Okay, so I'm trying to locate the very zone. All right, it was this one. I placed the vertical line there, right? So it means this day closed bearish. So if it closed bearish, so if this day closed bearish, the following day I'm just expecting a bearish move again. Why? Because the previous day would have created that momentum. So I just look into the previous day, right, and locate the order blocks that I can use. In this case, there is just this order block. Easy. So it means the beginning of the day, 2 a.m., price is going to start to retrace, going into that order block. Then I'm just going to place my sell trades from that zone in the order blocks that I'm seeing. These are easy trades. At times they might exceed this order block for better zones up there, but wait for a confirmation there. 3-bar play confirming there. You just jump into the trade and you trade that with ease for that very day, right? Okay, so it was done for this day. Let's look at the following day. So after this day, it closed bearish again, guys. Easy. So if it closed bearish like that, what is it that we do? Let's mark it. Right? Remember, price had taken volume there. We know that we had a bearish trend. So this day closed bearish. So what's for the next day? Let's go to our H1 to start with. Right? You can even go to M15 if there is nothing on H1, so that you get a confirmation there. Okay, I know it's back there. Alright, it's here. Right. So this day actually closed bearish like that. Right? Closed bearish like that. Looking to your left, the only order block that was just there is this one. Right? So the whole day price was actually retracing into that what? Order block. It is actually giving us a what? An M pattern. Right? So on that M pattern that we're actually seeing on the second leg, we can actually see that this bar took the volume that we had there, right, from this neckline, right? I'm considering this M price took out that volume, and you can actually jump into the market there, right? So another sell trade, right? There is no question the following day was bearish again, so you can be adding position as you go. The following day closed, this day actually closed bearish, so this day you're supposed to nail it. Sorry, this day closed bearish again, so this day you're supposed to nail it. How do you nail it? Just go to your H1. On your H1, what you do, easy. Right? So we are saying this day closed bearish there, right? The previous day, what is that you do? The day ended on a retracement. Price came into the order block. So price coming into the order block closed with a doji there, the first hour of the day, right? The next hour is bearish. That's a doji pattern. You know a doji pattern, and you know what it means, right? We go down, right? Or these three bar play, 1, 2, 3, you go down there, you sell. Easy trades. So the other thing now is the derivative market always closes at 2 a.m. So you should always be seen in the market at least after 2 a.m. 2, 3, 4. Be doing your analysis. That's when you map all the setups of the day, right? That's when you do your analysis. 2, 3, 4. Be on the market so that you won't miss the best move. Because some of the moves, they're just going to come exactly at 2 a.m. and they slide, right? Or some few hours. In this case, this was 2 a.m. 2, 3, 4, 5, 6, 7. We're already dropping, and some are still asleep at 7 in that order block, right? On this day, on the following day, we closed bearish again. There's no question about that. So price actually retraced a little bit, came into that order block. That was the first sell. First sell, 2, 3, 4, 5, 6, 7. Again, we got that drop. The following day, this one managed to close. I think it was now bullish. Yeah, it was bullish, a little bit bullish, right? So it was tricky. Let me look at it. Yeah, it was bullish, right? But anyway, it was a continuation pattern, right? That is it. So now let's look at this week, what we were getting like that. All right, so from this very zone where we came to the order block there, we close with the doji. Next, we're closing with the bearish candle. So after this bearish candle, what is it that we look at, right? It's just the same story, same things that we're talking about. We close bearish like that. So the next thing that we're going to do, just our H1. If there is nothing on H1, you go M15, H1, right there, right? So we closed bearish on this day. The day started there, we closed bearish. What's next? Just look to your left. Where is the very order block that you can use? Look at that order block. So easy trades. 1 sell, 2 sell, right from that zone, right? The following day, right, we closed bearish again. Bearish. Let me actually remove that. We closed bearish again. This day, we closed bearish again. So what is it that we are looking at? Let's just go to our H1. We close bearish. So it's on this day, actually, right? Sorry, it's on this day. We actually close bearish here. Then we go minimum retracement, right? This is 2 a.m. 3, 4. Price was already dropping 4, but we want this drop 4, 5, 6, 7. Around 8, price came to that order block and it started to continue going down, right? On this day, we closed bearish. No questions about that. That's when you got the doji, right? Price started with a retracement. After that retracement, let's look at that order block. price was just retracing into the order block, then you will have gotten this sniper entry in that what, in that zone, guys, right? Easy. So let's look at this one again. I'm just teaching you how to use the daily time frame, right? So here we closed a bearish. Remember, I told you it's bearish. Why? Because I'm looking at trading view. It was bearish like that. So it was bearish like that. This doji, it was actually bearish. So this day was bearish as well. It was bearish as well. So on this day, that's when Charles, sorry, I'm using you as an example, he was buying V712. Then I'm like, a price you might bend there, right? Why? Because of the daily candle, right? So this week, it was nothing but just a retracement, right? Trapping diagonal liquidity. Remember, we talked about liquidity, right? So if you're looking at the structure there, you're seeing they breaking these lows there. This was the previous low, it is broken there. So this is just a retracement that is happening there, grabbing this liquidity there. So this move was just used to grab liquidity. So the moment you saw price back at this order block, we should have taken advantage of this move and taken more sales on this. Why? Because we have confidence that at least this candlestick should close bearish, because the previous day's candlestick was what? Was bearish. So the best sales would have been taken from this one, from this zone, and we sell and we go deep with it, right? So this buy, I wouldn't actually expect people to be in this buy. Even the structure is actually telling it wasn't so good for people to be jumping into buy trades like that, right? Always respect the daily time frame. It will protect you from unnecessary losses, because the previous day will have built some momentum. So that momentum will take us into the what? Into the next day, right? So the same with today. Unfortunately, this move, it was so quick, right? It was quick, maybe because of the momentum, but it might give people an opportunity. So this day closed there. Let's go to our H1 and see, right? So the day actually closed here bearish, and it just opened bearish, right? But it's starting to retrace now, right? So the best zones for ourselves, maybe this order block, that order block, that order, but on the other lesson that I'll actually drop on YouTube, make sure you're also following the YouTube videos that I'm teaching, right? There is a concept of premium and discount that I am teaching, or that I taught you, but I told you this concept using the Fibonacci. Retracement should be at least 50% of the impulse. This is an impulse move, 50%. So we start looking for sales at least after 50%. So the best order block to use here will be this order block for our what? For our sales, according to that what? To that concept. This would be the best what? This would be best point for our sales. This one, in this case, these ones are there in the zone that we call the discount zone. We sell in premium zones only. So this will be the best point for this sell. But because you know the momentum, the daily candlestick has to close bearish. Maybe if we get to the late hours of the days, we might use this order block, that order block, that order block for our sales, right? We also have to consult our LQB points, right? Large quarter and lower quarter points, right? Okay, so as we are looking at this one, we can actually see that price is actually at a quarter point. So this order block might actually be used because it's actually the quarter point. So price might even start dropping right there and we make money. It's all about confirmation on lower time frames, right? Or price might use this order block, right? So already I'm removing this one, right? Either here, there, or this one. And when price comes to this one, I would prefer if they tap the quarter point as well, like that. So just mark that zone. If I get a confirmation there, the best will be on the quarter point, and I'll actually sell. At least they will have trapped some liquidity there, mitigating this very order block as well. It wasn't mitigated as well, so there's some little imbalance there. Let me just confirm. Yeah, there's some little imbalance there that might be closed. There's a small gap that should be closed there, hitting the quarter point, and you sell. So these things should be put in confluence when we are trading, and we maximize on those things. Hopefully I've helped someone, right? I've helped someone in their analysis, and they'll use this to their advantage. So on V75, we're saying just have to go to the lower time frame. So if you go to the lower time frame, guys, this is just a smooth and clean trend, creating BMSs to the upside. You can't argue about that. So the best thing is you wait for your structure to be broken. At least price should come right? Always remember these concepts, guys. They're important, right? If you see something, like, don't just rush. It's a quarter point, you just sell. Then no, right? The previous low, we have an impulse corrective. The very low, the extreme, want to see the extreme being broken, right? So price is to, if I'm to map this one, I want to see this being broken, right? That's the only condition in which I will sell on this very point. Prices to break this one, they need to have to return to the structure. I believe they'll have left some order blocks there. Then what? Then I will sell now from those what? From those zones, right? So even on the lower time frames, you're just going to look at your structure on that quarter point. Look at your structure, you confirm your structure, then you what? Then you jump into the market and you what? And you trade. This is covered in the video. Not for steps, like sniper entries, right? That video sniper entries, you look for that one in the Telegram group and you learn, right? So thank you guys for allowing me to take you through this. Hope it will be helpful to all of you guys, right? If you have any questions, you can actually ask in the premium platform, right? I just thought of mixing the concept as I did, so I know I might have caused some confusion to other people, and I might have shed some light to other people. So feel free to asking on these concepts, and we trade together well, right?